Hello and welcome to another update video about Solana. On the Solana chart, we've seen a little bit of an increase today, but all within the boundaries that I shared with you yesterday and that I shared earlier today on Discord and Telegram. We really still only have a corrective price action here in a sideways range. Okay, the range is defined by two trend lines. Not sure if what I have labeled now here as E-wave will stretch a little further to the trend line or not, but the situation is unchanged. So main support is between $47 and $79. So basically there are three main Fibonacci levels I'm going to watch if the price breaks out of this yellow line to the downside and takes out the B-wave low. That's an important level where I say, okay, if we get a sustained break below that level, we are ideally then in wave C of 4, but it takes a break below that level because at the moment this B wave can easily extend a little bit. Okay, what I can tell you is we are definitely still in corrective price action. This is not to be mistaken with any impulse or anything. It's corrective price action. The market itself doesn't really know what it wants to do. You can see that volume is reducing, volatility is reducing. It starts to look more and more like some kind of a triangle pattern that's forming here. Now, triangles can break to the upside or the downside. Okay, in an upside scenario, the price would, well, most likely extend in wave 3. So that's the short-term bullish scenario we've been talking about for a while. There's a reason why I'm not taking it off the chart, because it's still technically possible and there should always be a bullish possibility and the bearish one. And then you need to know the level that distinguishes the two. And for me, it's the 85.50 level. So a break below that level, which is, as I said, this, is it 80? Yeah, 85.50. It's this swing low. Yeah, a break below that level would confirm to me wave C. Again, confirming something is not certainty. And to the upside, obviously, I mean, there is going to be resistance around. There are two levels above that can be called resistance. One is the $109 level. It's the golden ratio, and one is the 78.6 retracement at $116.44. That is going to be the last main resistance before getting to the recent highs of end of December. That level is at 127. And ideally then the price would stretch higher to form wave 3 extension. But yeah, it's not very clear. Okay, is it going to be a B wave that's unfolding, or are we in wave 3? At the moment, if anybody's trading for short-term upside, I mean, the only level I can offer here is the 85.50 as support. Yeah. So if you're trading to the upside, I think it would be reasonable to maybe look at a stop below that level. But I mean, look at the reward to risk ratio. It's pretty miserable from where we are now. It was better earlier today when I made my last video, when I highlighted 85.50 would be the level. If that breaks, we are likely in wave C. But obviously the third wave is still a likely option. Okay, so that was a decent reward to risk ratio from there. Whereas that would have offered a tight stop, but now we are quite far away from that level already. The price has moved today. I mean, round about 15%, right? Okay, it was a little higher today. Not that much, but it moved up quite a bit. Yesterday I told you the same thing anyway. So always ask the question about reward and risk. I mean, this is basically, it looks nearly like a technically full Elliott wave triangle, to be honest, which could then break down, but it's only broken when it breaks below the B wave low. Now, there are too many possibilities here to really just say, okay, this is my triangle and it's gonna do this. Just doesn't work like that. There needs to be a confirmation with a break below the B wave low. And if we move to the upside and break above 109, then looking at the microstructure should take us to 116, 117, and then possibly to 135. So still short-term uncertainty. The move today hasn't changed my view at all. We haven't even broken out of the range. And I can tell you already now, until we break out of this range, there isn't going to be any interesting or exciting update, because all the market is doing is just extending the sideways range, extending the potential triangle, and that can always happen. So even though I'm labeling this as A, B, C, D, E, it can easily extend. Okay, triangles regularly extend. I mean, for example, it could be that the C wave is just sitting here. Okay, we'll see. Looks a little short for a triangle time-wise, but especially as we are not even, close to the apex. This is a lot of space technically. Yeah, I'll keep you updated, but as long as we are in a price range, this is a paradise for grid bots or range traders, not so much for trend traders. So yeah, I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.